So on to the money show for today, we're going to be focusing on the large cap space because large caps tends to give you stability in your portfolio when it comes to the long-term investing. Not having exposure to the large cap is just out of the question, but is this a time to maybe park your money in this particular space as compared to what one might have in the mid and the small cap? What should be the allocation as of now? Should you go ahead and buy more? And is this a time to get even more bullish on the large cap space or not? Let's try and find out an answer to that and decode all of this. We have Aditya Agarwal, co-founder of Wealthy.in. Hi Aditya, thank you so much for all your time. Always great having you. Firstly, let me ask you, given the returns in this this particular year on a YTD basis, there has been great moves in the small and the mid-cap end of the market. There were concerns regarding the rate hike, inflation was a worry, but now that we are getting over some of those market chatters, what do you believe in terms of the large cap investing? Do you believe is this a good time to go ahead and make large cap investment a bigger part of your portfolio? Because we are seeing stocks like HDFC Reliance now moving in some tandem. So what's your view on that?
Hi Srishti, thanks for having me here. Always a pleasure to be on this show. No, I think as you rightly said at the start of the show, right, when you're building a portfolio, large cap has to be your core equity portfolio because, we have seen with small and mid caps, there are cycles to be tackled, and, sometimes small and mid caps are also driven by investor frenzy more than the fundamentals. But, in large caps, you see companies that have massively sort of dominant market positions and are here to stay for a long time. So fundamentally, I believe that large caps should be the core of our portfolio, equity portfolio. When I say core, it could be, upwards of 60% allocation, right? And yes, right now, I think I would say it's been not just a YTD, but overall, last 2-3 years, investors have seen really good returns in small and mid cap space. And as all of us, we know, investors end up having a recency bias that whichever asset class has performed the best recently, investors end up flocking towards that. But, now, even if you look at quarterly results, right, we see that the earnings growth in small caps has definitely tapered down. And yeah, if you're sitting on big gains from small and mid cap space, then it is time to reallocate that money to your large cap portfolio.
I'll put two questions to you back to back. Firstly, when it comes to the large cap investing, you said that 60% should form your portfolio right now. So given the fact the kind of return that we have seen in the mid and small end of the market, is this a time to actually go ahead and book out some of the profits, or along with large cap, you are still bullish on the mid and small end of the range? And the second part to this query is that somebody who's looking for a fresh investment in the large caps has no portfolio right now. What should be the building blocks for the same?
Got it. I think to answer the question first, right, 60% allocation is something that I recommend as a long-term strategy to, large caps, because what happens is that often the mistake that we make is that we have a good portfolio, but we liquidate it and we sort of chase an asset class that is sort of flavor of the season or flavor of the month or flavor of the, year, right? It's always better to have your core strategy sort of unchanged because, that gives you, sort of stability and consistency in your returns, right? And even if you look at sort of, because there are two ways to look at any investment, right? First is that, is this fundamentally a superior asset class, right? So when you compare to equity, like, is there enough information, enough data to say that in long-term small and mid cap ends up outperforming, large cap? Yes, they end up outperforming large cap because, fundamentally they will grow faster. But you also see, really, really large losses in your portfolio if you're very small and mid cap heavy, right? So the best, and if second part of the conversation is that if you look at earnings growth as well, right? If you see small caps, recent quarter earnings, the small cap earnings seems to have slowed down, right? Obviously, you see that surprise always with small caps because their business position is not yet cemented, whereas mid cap and large cap have sort of shown stability in the results. So I would, if someone is looking tactically and is sitting on big profits, let's say in small cap, I definitely would recommend that, you take out those gains from small cap and maybe split it in large and mid cap allocation because, that's where we see momentum in earnings also going forward. And obviously large cap, if you look at Nifty, last 2 years, we have sort of grown at 6% annualized, right, in Nifty. And there is enough and more pressure in spaces like banks, IT, consumer staples. So, those 2, 3 spaces could be interesting to look at, which fundamentally can probably give you much better returns than a small cap allocation, going forward.
Okay, Aditya, but when
And
no, please go ahead.
yeah, and I think the second part of question, that if I'm looking to construct a large cap portfolio, right? So I think there are 3 ways you can do it. First is, of course, you can pick up some stocks of your own if you are confident of certain companies. Second, of course, is through mutual fund route. And mutual fund route, again, you have 2 strategies. One is you do a large cap active fund, or you can do a passive fund, right? So I think I personally, there is in India, we have, while the data says that passives have outperformed the large cap, right? Or rather, very few large cap active funds have defeated or the benchmark. But I fundamentally believe that active fund managers still have a role to play in Indian market. So if you're looking to deploy money in large cap, first of all, of course, if you're deploying large sum, do an STP route. And you can sort of take an approach where you deploy, let's say, 70% of your capital in in a passive fund, or 60% of your capital in a passive fund, and the remaining 40%, you can sort of build a portfolio through a couple of mutual funds. Or you can also sort of do a multi-cap kind of approach in mutual fund, which has slightly higher tilt towards large cap. In fact, that's my favorite strategy. I don't do a large cap per se. I just do a multi-cap and flexi cap in my portfolio, because then that allows me to sort of build a portfolio which sort of has large cap, mid and small. And that gives me essentially both the acceleration of mid and small, at the same time stability of large cap.
Thank you so much for highlighting all the ways that one should go ahead with when it comes to increasing the exposure in the large cap, because my next question was exactly on the same. When it comes to the stock selection in the large cap space, there's always a lot of industry churning, or rather sector churning, that we see. Sometimes it's the time of financial, sometimes it's IT that is booming. At this point in time, what should be one strategy in terms of stock selection? Which areas they should be focusing on, given all the macro sort of news flow that we have? What's your view that one should have an eye on?
See, I think equity, we should always have a 8 to 10 year view, because we are probably the only large economy which is a $4 trillion economy and growing at 6 to 7%, right? So we are only such economy. Now, majority of that growth, if you see, will be driven by large caps, right? Because as you become more formalized, your larger companies sort of contribute the most percentage of growth, right? So majority of that sort of growth is going to come from leaders of each sector, and sector could be IT services, financial services, right, consumers, right? And if you take a 10-year view, then essentially every sector is looking very interesting. Every sector is sort of has sort of potential to go really big. But of course, we have to, when you're picking up stocks, I think 2 things we have to keep in mind. One is the valuations that we are entering at, because of the business or that company is already highly valued, and even next 5 year of business sort of growth maybe just doesn't justify that kind of valuation. Then probably it's better to stay away from it, because the stock can get repriced at any point in time. And second, I think some certain cyclical stocks, like for example even your cement, etc., right? These companies end up sort of going through cycles. So you have to be careful to not sort of get into them at the peak of their cycles. But yeah, in terms of, I think, sectors, as I said before as well, that, banking, IT services, I think consumer staples, these are 2, 3 sectors in large caps, which have been sort of, stagnant to, I would say, so to speak. And there are opportunities where, some companies in those sectors are looking, interesting in terms of price and timing wise as well on entry side, right? But yeah, if you have a 10-year view, then I would say that get exposure to a good passive fund, get exposure to a couple of good multi-cap funds, and then I think that should be enough for you to create wealth and write the India story.
Okay, but Aditya, if one is looking to increase the exposure in the large cap space through the mutual fund route, what will be your advice? How should one go about it, given the exposure that you discussed with us, given all the views related to the large cap? Maybe it's the time where you should go ahead and increase your exposure in this space. In mutual fund strategy, how should one go about it?
Right. On mutual funds, as I said, maybe build a portfolio through passive funds, right? As well as on mutual fund side, one can look at a multi-cap portfolio or a flexi cap kind of fund, which has traditionally been, 65 to 70% of large cap. right? Because I think if you have a fund which is 65-70% large cap and the balance 30%, it sort of tries to generate alpha over the Sensex or over the Nifty by picking up, good mid and small caps. I think that would be the ideal strategy, because you also, while mid and small cap are something that can get sort of, the ride can get choppy. But if 70% of your portfolio is large cap in a fund, then that choppiness can be sort of avoided. So yeah, so you can split your money between a passive fund and a couple of good multi-cap funds to sort of build your large cap portfolio.
Okay, so that's the advice coming in for all of those who are looking to invest in the large cap space through the mutual fund route. But with this, Aditya, we'll let you go on that. Thank you so much for joining us and with this discussion related to the large cap, whether it's a time or not to go ahead and increase your exposure in this particular space. And if you believe so, if you're convinced, then what should be the building blocks or the steps that you should take in mind. But with this, viewers, it's time to slip into a very short break in this edition of The Money Show. Don't go anywhere. We'll be right back.